this is not like optional, this Bitcoin thing. This is sort of like you get on board or you may be literally poor. You kind of have 5 years to jump on the train. That's it.
Those who owned Bitcoin before the rotation will join the wealthy class. Those who didn't will remain permanent renters and everything.
Yeah, the money printer is a problem, but your Bitcoin is absolutely smashing the money printer as far as track record. There's only one thing that's consistently beating the money printer. That's Bitcoin. That's probably the weakest asset of all the assets. Property could be equally bad or maybe even worse than bonds. Don't bet on what worked 20 years ago. It worked 20 years ago. It was good 20 years ago. Not now.
So that means we're like bang on the power law. We're like exactly there right now. That's crazy. That's so crazy.
You could argue, the real bubble part of this thing is
Welcome back to Gday Bitcoin, ladies and gentlemen. Join me today, good friend, Fred. It's good to see you again. It's been a minute. How are you?
Yeah, it's good. Good, Sean. How's it going?
Yeah, really well. Since the last time we spoke, it's been a while, but you've come out with another book, Bitcoin 1 billion. Mate, it's incredible. Well done to both yourself and Ben. I absolutely love it.
Oh, thanks.
Why did it come about? Why another Bitcoin book? Because, just on my desk here, I've got heaps of them. My bookshelves are full of Bitcoin books.
Yeah, there are. I think one of the things that we wanted to do, we have a very different approach. So first of all, I didn't want to kind of rehash kind of how we got here, right? Like I wasn't interested in covering Satoshi or, why Bitcoin is great and everything. What I wanted to cover is what is likely to happen over the next 20 years in Bitcoin. Everybody has this really fuzzy view of the future, right? Bitcoin will go to 1 million, maybe it'll go to 50 million. I don't know, but it's all fuzzy. And they've got these various, and then, they'll say, well, it's going to go to 1 million, but a cheeseburger is going to cost you $100, And so nobody's really thought through exactly what all this stuff means in terms of how realistically, what's going to be the inflation rate when we get to 1 million? Realistically. Now, we don't know for sure, but we have some ideas, based on the past, right? So I wanted to put into sort of one book all the quantitative and logical arguments for why we're getting to 1 million, how fast we're getting to 1 million, what's the world going to look like, what are all the reasons we might not get to 1 million, like governments or quantum computers breaking Bitcoin. I just wanted to have all those facts in one thing because, I'm on these spaces and mainly spaces now. I haven't done so many videos. I'm on a lot of spaces and everybody sort of needs these facts. And I just felt like it'd be useful to our community if we had these facts in one place. And the other thing is I want to be able to have a reference where financial advisors who are, making these allocation decisions, they're talking to their clients. They don't have the facts. They really don't, they don't, literally today I was talking to a broker of mine at Merrill Lynch. Okay. And, this guy has no idea, like nothing, zero, and these are people who are making massive recommendations on, how people should or shouldn't, allocate their money to Bitcoin. So I feel like, we need to talk to their language. Now, you can tell them that there's going to be a big print and everything's going to, collapse and we're going to dissolve the Fed and everything else. That's not going to play well with those guys at all, right? It just won't. You know what I mean? They're going to be like, next.
Not their language.
Not their language. Now, on the other hand, if you can kind of convince them that they might be missing out on the next big thing, like cloud computing was for the last 10 years, right? I mean, they're going to be like, oh, shit, maybe I should actually pay attention to this guy. Maybe there really is. Maybe this is part of the big story, in the next wave. And so I wanted to really take that lens, the lens of an investment allocator, fund manager, financial advisor, or just, a guy who's coming into this not from the Bitcoin perspective, but from the stock perspective, the guy's got a Schwab account or something, right? Why should they buy IBIT? Um, because they're not gonna go and buy a coin. They're not gonna open a Coinbase account, or I don't know what it is over in Oz, but they're
Amber
not gonna have.
Bitcoin only.
Yeah, no, but to buy,
The
how do you buy? What's the main?
one that I recommend is Ambrat because it's Bitcoin only, but I think probably
Okay,
the Coinbase equivalent would be something like CoinSpot potentially, or
CoinSpot, right?
and yeah,
So, but
independent
like these
reserve.
guys, the most of these guys who are buying the ETF, they're not going to do that, right?
Yeah,
So it's to give these guys the ammo and the courage to actually jump in,
yeah.
and so I mean that's a world I know. I know this financial world very well, and I just want to give them a book that spoke to uh, spoke to them, like So here's my book. Here's my friend Larry's book. They're both good, but like I will tell you, this one's going to be really tough for a fund manager. A guy who's a 60-40 fund manager. This one's still going to be tough, right? Still hard.
Yep.
But at least I kind of give them a little bit of a framework of like, okay, how does this crazy theory fit in to potentially larger than 1% allocation?
Yep.
So anyway, that's where it came from, the book.
It's so good. So after like reading the forward, you get to chapter 1, and it's the Bitcoin power law.
Right.
And I'm like, the power law, and then British HODL pops into my mind, and I'm like, freaking the power opinion. And then I think about pasta break-in and all the nonsense that went on with that. But reading through it, I was like, oh, well, like even if this maybe breaks eventually, it's been working. So you're saying it's been following the power law with 96% accuracy. Couple of price targets, 2030, the power law puts Bitcoin at 450,000 US, 2035, 1.45 million. And then this power law is also holding against the USD, gold, the S&P 500 and stuff. Is like, oh, well, that's pretty interesting. And then so I took a moment to assess myself. I'm like, where is this hang up coming from personally with the power law? And right at the start, I thought the power law was really good, but definitely better than what was Plan B's model? Stock to flow and stuff. You're like, well, this is definitely more realistic. But I think the issue that I had internally was when people started pushing to trade against the power law, I'm like, this is crazy because it may, like over time, yes, it's following this, but in the short term, it could be up or below and it may not follow it exactly. And I think that's pretty dangerous. But how do you approach the power law? Like, what do you see it there for? Is it to be able to swing trade, or is it just to be able to have your conviction over time, or what's the point? Because you started the chapter, the whole book with it.
Yeah. So what I would first describe is this: we all have this sense of how great Bitcoin has been as an investment, right?
Yeah.
And there's like lots of different ways to slice that and dice it, right? You can say, well, it's been trading for 15 years, and over the last 10 years, it's been the top performing asset in 8 of the 10 years. That's one way to look at it, right?
Yeah.
You can look at it peak to trough, drop down, all these other different ways. But, if you really want to understand what it is, you have to sort of say, is it following some kind of statistical pattern? And you could sort of say, well, maybe it's an exponential pattern, right? Like maybe it's some constant growth curve, really. And there's a lot of volatility around that growth curve. So, and you can model that. You can say, does it fit an exponential growth curve pattern? And the answer is no, it does not. Okay, it doesn't actually fit that. And then you can ask yourself. And by the way, stocks fit that really well. Like, so if you look at the S&P 500, actually it is a very much an exponential growth pattern. Now, again, just like if I told you the S&P 500 goes up 11% a year, you're going to be like, not always. It didn't do that in in 2019, right when the pandemic hit. It was down a lot, so it still wobbles. But there's a correct model for the S&P, which is it's a constant growth rate. It's growing at 11% a year, and that number is about the same as it was 10 years ago, right? Now, Bitcoin is not doing that. Bitcoin objectively is not doing that. Bitcoin was growing at 500, 1,000% a year back in the very early days. And it's slowing down, right?
Yeah.
And that slowing growth model is exactly a power law, right? So we now have this is just the accurate description of what Bitcoin's been doing. Now, whether it continues to do it or not, we'll see. But this is a description of what Bitcoin has done so far. It is the accurate description. So this is not subject to interpretation, right? This describes the way Bitcoin has been since really the first recorded price, movements like October of 2010, really, and then we know now kind of how this thing is moving and what's the use of it. Well, the use of it is two things. One is if it should give you a lot of conviction as to where we're going in the next 5 and 10 years, I would say. Maybe even much further than that, right? This law does not show any signs of deviating. It seems, in fact, that it's getting stronger and stronger over time. So I would say, the first thing is it really gives you a mental model of what's happening, right? So you now have a model of, and we're probably growing right now at about 40%, compounded annually. But, there's a lot of volatility around that 40. That 40 could have a negative year, right? It's possible, according to the volatility of it. But, on average, it will either double or it'll go down by half, roughly. And that's kind of what the power law tells you. So that's the first thing it tells you. The second thing it tells you is you have some metric of valuation. It's a very rough metric, right? You can't trade on it like day trade or anything like that. But we have this power law trend line. If you're at, 2 times the trend line, you're getting into elevated territory. Now, it doesn't mean you're going to stop there. You could go to 3 times trend line. You might go to 4 times trend line, but we're starting to get more pricey. So what does that mean? That might mean you stack less. Like if you're earning money and you're stacking, maybe you stack less hard at those kind of prices, right?
Yeah.
It also means that if you're kind of doing some rebalancing and you want to keep a certain amount of cash, maybe those points you have a lot bigger rebalancing, right? So that can be useful. I think it doesn't give you shouldn't think of it as a trading thing, no matter what, but you should never trade Bitcoin, right?
Yeah, agreed.
You should never trade Bitcoin, but if you want to reallocate somewhat your position, that tells you something. And so I think it's extremely useful. It also is very useful to look at it versus other assets, right? So you can look at these power laws versus gold, versus the S&P, and you can sort of see, well, right now, gold is extremely overpriced relative to Bitcoin. So it really tells you something. Probably a really bad time to buy gold, right? Even though everybody's saying buy gold, even though people are lining up in front of banks to get gold,
Yeah.
probably a really bad time to buy gold, right?
Be fearful when others are greedy. If you've still got your Bitcoin on an exchange or you're looking to take your Bitcoin security to the next level, I've partnered with the Bitcoin Way. They offer live help for setting up cold storage, running your own node, keeping your Bitcoin private, planning for the future, using multi-sig, and so much more. They never touch your keys. They will not touch your coins. Instead, they'll show you how to buy and keep them safe. If you want to make your Bitcoin setup safer, you can book a free 30-minute call and have a chat with them. Safe Dina Moose, the author of the Bitcoin Standard, Natalie Brunel, Preston Pish, and so many more recommend the professional IT cybersecurity team. Couple of outstanding things here. You can see they've been featured in Forbes, Bitcoin Magazine, Bitcoin Prague, Zero Hedge, Simply Bitcoin, the Bitcoin Safe Dean, the Bitcoin Standard podcast with Safe Dina Moose, Bitcoin News, obviously Gday Bitcoin for a long time. They're the world experts in helping people become self-sovereign. It's not just about protecting your Bitcoin stash. Yes, they will help you do that in a very easy to understand step-by-step process. But from there, they can help you secure your data. They are your personal cybersecurity IT experts. And then step number 3, is getting a second passport, a Plan B residency. The team, very cheap, very affordable for people that are looking to take their sovereignty to the next level. You can find out more about their services. When you first log in to their website as well, they have got a free 3-minute quiz to allow you to check if you are doing your cybersecurity, your setup correctly. I urge everyone to jump onto the bitcoinway.com. I have put a link into the description for everyone. Could not recommend them enough. I've used them personally before I ever partnered with them for the channel, friends and family. They asked me to help them out. I'm like, go to the world experts. That is the Bitcoin way. So reach out to the Bitcoin way today.
Right. And we've had that same feeling about Bitcoin when it was at a low versus fiat on the power law, right? That was the period like in November of 22 when people were like, okay, this is it. It's going to zero. They're going to arrest everybody. Everything's going to zero. Everything's screwed. So, you can look at these things versus different metrics, and they all matter, right? I think that they're all good. The power law versus gold is almost as powerful as the power law versus fiat.
Yeah,
which
sort of broke my brain a little bit that the power law holds on multiple metrics, not just the one metric.
Right.
Like it's not just against USD. Like I still don't really understand how that's possible.
Well, let me explain. I can explain how that works. So there's sort of two things to Bitcoin. Number one is it's hard money, right? But so is gold. Gold is hard money too, right? So whenever there's fear of debasement, both of those things are moving up, right? In theory, right? So there's that one theory. On the other hand, there's an adoption process of Bitcoin, right? Bitcoin has certain advantages versus gold that are very unique to Bitcoin, right? As a hard money. It is portable. That is a really, really strong use case. And you don't need to protect it. You don't need to put it in a vault, right? Those two things, I think, are just killer use cases for Bitcoin. And as time goes by, we have this adoption story that's happening with Bitcoin, right? Which is more and more people are discovering Bitcoin, right? And if you look at this, the power law versus addresses, you'll see that the addresses, the growth of addresses with, say, 1 million sats is a very strong power law, even stronger than the price graph of Bitcoin. So what that's telling you is that, and it's growing a lot less than Bitcoin. So it's growing at around 16% per year right now. Only 16%. So so it's doubling every 4 years, let's say, right? Every 4 years, the number of Bitcoiners doubles. And there's, by my number, the way I look at it, about 50 million real Bitcoiners. There's 50 million. Now, some people say there's 100 million, but if I have $5 worth of Bitcoin, does that qualify? No, probably not. There's some threshold, and I would say there's 50 million people who have, a couple $100 worth of Bitcoin.
Yeah.
There's only 15 million people who have $1,000 worth of Bitcoin, right? That's it. 1,000.
Wow, that's crazy. Well done to everyone stacking sats.
Yeah. No, I mean, there's so few of us, right?
That's crazy.
We're very few. I mean, if you look at how many people have 10 Bitcoin, we're talking this with Joe Carlasale, and I had to look it up. For the U.S., it's about 30,000 people. That's it.
Wow.
In the entire United States, which is the majority, right? I think worldwide it's about 70,000 people.
That's so crazy.
So it's not that many people. So we're still early. Yeah. But as this thing compounds, every year, so now it's going to double in 4 years, 8 years, it'll quadruple. And in 20 years, there will be 1 billion people who have Bitcoin, right? So we will get there to 1 billion people, an Instagram type number, right? That have Bitcoin. But as these people discover Bitcoin, they have to buy from this pool. That's the same, and so the price does not go up. It goes up to the square of that number, roughly, right? So there's a quadratic response which if you think about it makes sense because they're competing, but they're pulling down the amount of Bitcoin from it at the same time. So it's sort of a self-reinforcing. It's a quadratic thing. You could also say it's Metcalfe's law, maybe, although I have some reasons to doubt that. But it has sort of, you notice this value with networks, right? That the value of the network grows to the square of the number of nodes. This is what Metcalfe sort of, but in any case, it doesn't take that much of a growth in adoption to give you this really substantial growth in price. So that's, I wanted to sort of try to explain all that. And it never has been put in a book before, believe it or not. So, there's been all these people like me and Giovanni and Sina and Plan C and so on. We put all this stuff together on Spaces or in tweets and stuff. But I wanted to put it in a book. And I also have an app that a free app you can just use. I don't know if you tried that. But
no, I haven't. Do you want to give it a shout out quickly?
Yeah.
I'll put it in the description for people.
Yeah, so it's called B1M.
B1.
Bitcoin 1 million. The Bitcoin 1 million app. If you Google it, there's a website and an app, and you can go to Bitcoin b1m.io, right? And you have this app with it tells you the model price, the actual price, all the stats of Bitcoin. It has the price versus gold, it has versus the S&P. It has, sort of a power law curve.
I'm just looking at it now on my screen, and I've got a question. So it's saying the Bitcoin price, 111,418. It's saying the model price is 110,699. So that means we're like bang on the power law. It's saying the multiplier is 1.01. We're like exactly there right now.
Yeah, that's right.
That's crazy. That's so crazy.
Which is like right there, this app, really you can condense this entire book, not entirely, but the power law parts of this book, they're in this app, right? You just look at the app and basically, we're right on. So you could argue, the real bubble part of this thing is yet to begun, right? We've not seen any kind of bubble yet.
Yep. And do you think we're going to have one of those normal blow-off cycle tops? Like since last year, September, I've been calling for 120 to 150. We had 126. So I'm like, anything above's a bonus, anything below's even better. It's sort of those dangerous words, this cycle is different, this time is different. It sort of feels like it. Like the ETFs are here, the institutions are here, nation states are starting to wake up. People are starting to put it into their sovereign wealth funds and stuff. So in a way, it does really feel like this cycle is different. But do we still have that?
I mean, the cycle is different. Already, all these other bull markets, they've only lasted about a year, right?
Yeah.
Really, like the movement. This market's lasted already 2 years, over 2 years, right?
Yeah. And we got an all-time high before the halving.
Yeah, but I mean, I think the halving is another reason why I don't think the halving matters much at all anymore.
We interrupt this video to bring you a really quick PSA. How safe and secure is your Bitcoin seed phrase? So many people still hold their 12 or 24 words on paper. Then they sort of upgrade to something like this. This is a titanium version. It does hold all 24 words, but look how big it is. This device, this revolutionizes it. It changes it. It makes it so much more secure. What this does, you can see there's a 1-inch washer on there. It comes with these punches that are almost microscopic. They give you a magnifying glass to be able to see the end of them because you really can't read what that says. And then they give you titanium washers, nylon washers. Think about this for x-rays, body scanners, metal detectors, border passes, just around the house with the metal detector wand, stainless steel as well. These are great for hot wallets. The titanium, it's going to survive a house fire. But this, compared to this, look at the size difference to it. You could fit 8 of these on this one plate, yet it still contains all 24 words. Imagine how easy that is to be able to hide. Now, the team have given a discount code for everyone. There is a link below. Now, back to the show.
Right. It's just
interesting.
It's not relevant. The amount of Bitcoin that is being reduced to miners is not substantial. the demand from ETFs from people like MicroStrategy is so much more than any difference in mining rewards. So you don't, there's really no reason. There's no logical reason to think that having could make any difference at all right now. Now, if you think about the cycle, right? Let's just think about the cycle a second, and you sort of say, okay, what is the cycle? What is the genesis of the cycle? Well, the genesis of the cycle is the cycles are created by halvings, right? That's sort of the the way people think of it, right? Like we've got these halvings. Okay, there's going to be much less mining rewards, so that's bullish. Therefore, we're going to rally, right? And then, it's sort of like the average total length of the bull market is 3 years, ending in this crescendo, over valuation. And then we have this drop. That's not really halving related. It's just bull markets last 3 years, and then we crash, and that crash lasts a year. And then miraculously, we got the halving coming around, and everybody gets excited again. That's sort of the model, the thought model for it.
Yep.
I kind of actually don't even think it actually even makes sense relative to past markets, because I think this bull market that we're in has nothing to do with the halving. It has everything to do with the ETF, right? We might not be, if Kamala Harris was elected and we didn't have an ETF, take those two things, Bitcoin would be at 50,000, we wouldn't be where we are now. So I do think the facts matter. I think interest rates matter. I just would statistically not read too much into the halving, but I would read a lot into the power law. I think this power law has such statistical strength that I think you can bank on that. You know what I mean?
Over time, though, because what we have seen, even though Bitcoin's following that power law, is in the past we have seen those drop down years and stuff. So if people are banking on the power law just goes sort of straight up and to the right. Maybe just zoom out a little bit and be like, over time it's going straight up and to the right.
You have to look at it in log space, right? And so the drops, while severe, are not severe in log space, right? And so, I'm not saying it's easy. 2022 is a really rough year for Fred Krueger, right? I didn't sell any Bitcoin. I'm sure you didn't either, but
I loved it. I like cheap Bitcoin. I love it when there's blood in the streets. That's what gets me excited.
Yeah, I was sort of max Bitcoin kind of before.
Well, we're sort of in different life situations. You've worked and provided a whole lot of value, and you're storing your wealth. I'm still in rapid wealth accumulation mode. So any red days are a dip for me, but I understand it's very different.
Yeah. So, I just think that the power law to me is, it's as strong as anything in finance. It's as strong as anything I've ever seen. In terms of the statistical, I'm looking at it going, holy crap, this is really a very good model for Bitcoin,
Yeah.
So I think that alone should give people a lot of confidence. But then you kind of now need to go, okay, well, am I going to run into some kind of, I could stop at chapter 1 and say, okay, well, power law, power law, it's great. But then you're like, but isn't this going to require all this fiat? How are we going to get an extra trillion to come into Bitcoin?
Yeah.
And so all these other things are well, even though the power law is there, here's why the power law will probably hold for the next 20 years, right? And the answer is the fiat world is so big, right? There's so much trillions of assets in the world, and when you start quantifying how big these assets are and how fast they're growing, you realize that there's plenty of fuel to fund that power law for the next 20 years. So there's no problem. There's no problem this tree is not going to reach the peak height at all. This is a little sprout here.
Yeah. I thought you did a real good job of that in the book. You talk about the money printer and housing and everything like that, but you're it only needs just this tiny little bit of these things, and it can get just this tiny little bit from here, but it could also get it from here or here or here, and it's all going to come in, and we don't need all of them. We just need a little bit, and it's going to keep doing what it's doing. And just one point on the power law, I'm sure it was yourself, Fred, that recommended the book Scale on the power law.
Jeffrey West.
Phenomenal read for everyone in regards to the power law and how it's found in nature. Like Fred didn't just make up the power law. Giovanni was the one that started talking about in regards to Bitcoin, but it's a mathematical model that's seen in nature very, very clearly in the way that cities and stuff grow. It's an incredible book. So let's just talk about a couple of those things. In Australia, like people store their wealth in property. Most people call it the Australian property Ponzi scheme. It's just like we had 10% deposits. The government said now you only need 5% deposit. House prices have gone up sort of like $40,000 on average due to that, etc. But obviously the house price, they just keep going up as the money printing and stuff. How does, I guess, Bitcoin start to take market share away from property as a store of value? And like, what's the benefit of people switching over to Bitcoin instead of storing it in their house?
Well, I think there's a lot of reasons why I think that's probably the weakest asset of all the assets, right? Well, other than bonds. If I had to rank the bad assets, I think bonds are the worst. But, arguably property could be equally bad or maybe even worse than bonds, right? And the reason why I say it is you've got some major trends that are going to work against property, okay? The first trend is you have AI. And Luke Groman put out this great post today or yesterday, and I retweeted part of his argument yesterday. And I said, look, his argument is basically AI, China came in and basically obliterated 80% of the manufacturing sector in the U.S. It took 20 years, but it happened, right? U.S. had manufacturing in 2002. U.S. basically has no more manufacturing. Now, AI is going to come in. It's going to obliterate the white collar jobs. It's very simple. Now, the problem is those white collar guys have mortgages, they have families, they like to take trips, et cetera, et cetera. But they have mortgages. They owe a lot of money in mortgage debt. Now, if they lose their jobs, those mortgages are going to default. And when the mortgages default, the banks are going to be in trouble. And so there's a pretty good case why we're going to have something like a big print / bailout needed for property. But in general, I think, we're going to be in a very lopsided economy where if you own shares in NVIDIA or OpenAI or Claude or Bitcoin or gold, you're going to do really well. If you have real estate, well, the guy next to you is going to get laid off and his real estate is going to be for sale, So I think it's going to be pretty bad for the middle class in general. And if this scenario comes to pass, real estate could be in actually a catastrophic situation. It's going to make 2008 look good. So I think we have AI. That's threat number one. Threat number two is there wasn't any better place to put your money in 2000, right, than real estate. Everybody was like, well, I don't trust stocks. They crash, right? I'm not going to put my money in stocks. I don't get any money by putting my money in bonds. So I'll put it in real estate,
Yeah.
But now we have a very good alternative, Bitcoin, right? Like if people see that as an alternative, you get a lot of real estate guys going, well, I don't need the hassle of, renting my place out and, trying to find Airbnb tenants and this and that. I'll just buy Bitcoin. Yeah, sure, there's volatility, but I'm going to do so much better as just than income producing real estate. So I think between those two things, I think real estate is severely in trouble. And the third thing is, I'm not sure about it, how it's handled in Australia, but the taxation of real estate's only going up because it's the easiest thing to tax, right?
That's right.
So You got your big fat, apartment in New York City. Well, we're about to elect a socialist in New York City. And what's he going to do? He's going to look at the Upper East Side and he's going to be like, this little quadrant here, double the tax on that quadrant.
They've started to do that in places like the Gold Coast. If you're living above the fourth story, you've got like a view tax now. Looking out at the people like land wind fill taxes in Victoria and stuff, it's just because you can't move it, they just will throw something on little bit by little bit by little bit.
Right.
And it's hard.
Well,
I think
all these things, you put these things together, I think it's looking very toppish for me. Real estate not looking good, like as an asset class over the next 10, 20 years. Now, could it go up because we have general inflation? Maybe, but I wouldn't bet on it, at least in the areas that I'm in. I think it'll vastly underperform Bitcoin. So
definitely.
Anybody I discuss, especially younger people, and I say, look, they're like, but I can't afford a house. I'm like, good, you don't need that. Rent a house. Doesn't matter. Like rent, don't buy. Just stop. Get that idea out of your head. Like this is not a place for you to become rich. Not a good way to become rich. Don't bet on what worked 20 years ago. It worked 20 years ago. It was good 20 years ago. Not now, So I think that and look, this is the biggest asset class in the world. Like this is bigger than the stock market, bigger than the bond market. Because everybody is ultimately pretty cautious, right? And so they're like, I put my money there. Well, real estate can't go down. I can, pays rent. I can rent it out. The reptile brain loves that kind of story. Yeah. The reptile brain doesn't like, I'm going to trust this thing, my future, to magic internet money.
Magic and internet money. And that phrase internally now I call a Bitcoin magic internet money, because what it does is absolutely magic in one's life once you begin to understand and hold on to it for a while. So I don't think that's a bad connotation when people say, oh, it's just magic internet money. I have bookmarks. I'm only like a little bit through it. It's sort of recently arrived. But I've done so much. And what I found so incredible out of this book is like the amount of just like little talking points that you can just like grab in your orange pill journey. And a lot of them are backed up by facts. But talking about, this is chapter 3, inflation, the trickle becomes a flood, just a real short excerpt. The working class will watch from the sidelines, understanding too late what happened. The wealth cap, already massive, will become completely unbridgeable. Those who owned Bitcoin before the rotation will join the wealthy class. Those who didn't will remain permanent renters in everything, not just housing, but in any store of value. So in reference to that, Fred, you're saying the power law puts Bitcoin at 450K, 2030, 2035, 1.45 million. How long does the average punter have before this wealth rotation takes off and they're locked out? Somebody trapped within the fiat slave system, there's no more escape. Someone stuck in the matrix.
I mean, I think the next 5 years, really. You kind of have 5 years to jump on the train. That's it. But it becomes very blurry, 5-10 years out, because I don't know. We're going to be walking around with humanoid Terminators walking around the streets, like
you see those robots being released.
They're going to be released. Yeah. All these robots are coming. I will definitely buy one. I'll be one of the first people to buy one.
I was looking at one. We have a robot vacuum, and like it's amazing. It's it's life changing.
Look, they had this video that was viral yesterday or the day before about this. I forget the name of the robot, but
Neo, maybe.
Neo, yeah. Anyways,
that's what we named our vacuum.
A little bit not quite ready for prime time yet. It looks like a 4-year-old trying to put glasses in the dishwasher. I wouldn't trust it with my fine china, but you know what I mean. Like if you've been around,
it's iteration 1. To the public.
Version 1, it's very alpha, but you just know where this stuff's going, and version 10 of this thing, it's going to be It's going to be amazing, right? So,
Yeah.
this stuff's, and all the brain power and all the money is all going into this. So you better believe this stuff's coming. It's like, don't bet against it, So I think that it will change the world. I mean, it's going to change absolutely everything in the world.
For better or worse? Like, are we living in Terminator?
Depends on who you are, right? Like, I would say if you're an asset holder, it's going to be great, right? If you're a worker bee, it's going to be really bad because most likely it's coming for your job. So you really gotta. This is not like optional. This Bitcoin thing. This is sort of like you get on board, or you may be literally poor. And you may have some really serious. And the other thing that AI is going to do, I think, is it's going to make government surveillance just really amazing for the people doing the surveillance, right? You're going to have
absolute tyranny.
It's going to be absolute tyranny. They're going to know absolutely every single thing that happened to you, right?
Yeah.
So
they're already starting that. They're trying to bring in digital IDs December 10th here in Australia. The UK are pushing it. There's protests and stuff in the streets, but it's come and pair that with CBDCs, UBI. In the book, you write quite a lot about UBI and stuff, programmable money, really helicopter money. It sort of seems like a very easy, simple way to be able to mass control the population. You wonder if they're doing all this by design, if everything's like accelerating more and more and more with like the digital IDs they push out, the central bank digital currencies, stable coins.
If you're a government, autocrat, this stuff looks really great. It's like as a means of crowd control and stuff. It's amazing, right?
Yeah.
I'm not making any political judgment because I think the right and the left will use these tools. Right?
Of course.
Is it going to be great? I mean, in many ways, I prefer the old world. I prefer, no IDs. I prefer no seatbelts. I prefer, I like just freedom,
Yeah.
Is it going to become much more efficient? Yeah. Like this, there's going to be a lot of things that are more efficient, but it's not going to be uniform nirvana for everybody. That's for sure.
Do you think that wealth divide is going to grow more and more, like the have-nots and the have-yachts? Or, I visited Brazil when I was 19, 20 years old and stuff, and there's people that live in these giant big mansions, absolutely amazing gated communities. And then the favelas and stuff, and it's just like first world and then third world war torn country, like side by side. Is that sort of the future that we're moving into, or do you think with the technology and the UBI and stuff, when you look around, it'll sort of look maybe a little bit more like Australia or a middle income suburban neighborhood in America, but everyone's just maybe a little bit more lethargic, like wandering? They don't really have as much purpose.
I think people are going to. I think they're lethargic when they think that they can get away with doing very little. But I think we're going to get into panic mode. I really do. Like, I feel like I don't think this has hit people. The realization of what's coming has barely hit, because people think, well, the government, like in Europe, right? The people think the government will provide. No problem. I'll just go on strike and ask for more. Well, the government can't provide anymore. Like, the government's tapped out. They can't. They have no. They don't have. They can't raise taxes because everybody will leave if they raise taxes. Margaret Thatcher famously said, "The problem with socialism is sooner or later you run out of other people's money." And I think that's the problem. You could say UBI, this, that, whatever, but unless you have some means of distributing, of getting that money to distribute, I think the printing stuff. It's kind of why I called it the final chapter of fiat. I don't think fiat is going to survive beyond 20 years. I think we are going into a world where, you try to pay with dollars for a lot of things. They'll be like, no.
And so then in that world, is Bitcoin the new rare?
Bitcoin's the new rare. I think in that world it'll be just fundamentally different from our world, right? Because if you think about our world, it's entirely built on credit, right? Everything. You know, when you're in college, they immediately give you 5 credit cards, right? That's the first thing they do, and they give you a college loan. Right? So so you're trapped within the debt thing, like from a teenager. You're already starting to get into the debt system. And in the debt system, you want to get further and further in debt and accumulate assets and stuff. Yeah, but you don't want to own a house in a deflationary system where the only thing, the unit is Bitcoin. Terrible, like your house is going down every year in Bitcoin terms.
Yeah.
So, yeah, you got to
That's
sort of
hard for people to comprehend. That's very difficult for people to comprehend that house prices do this when priced in Bitcoin, but when priced in fiat, they seem extraordinary.
But in 20 years, I don't think that priced in fiat is going to even make any sense. Nobody's going to care about fiat. So you kind of have to make the switch now, and then sort of ask yourself, okay, like, if you're holding cash right now, you're actually watching it go down 30% a year in Bitcoin terms, at least. So is it worth that extra safety to have this thing go down 30% in Bitcoin terms? So, and I would argue, to some extent, there's some case for it, depending on your wealth levels and your income levels and everything else. But there's also a pretty strong argument to be made for the next 5 years to be kind of Bitcoin only.
Yeah. So. Unfortunately, our company, we've got like 6 to 9 months worth of cash as a runway, for wages and things like that, for fixed costs. And I like having that there. We've obviously got Bitcoin on the balance sheet, but because they're fixed costs for wages and things like that, that's not really going to change. But I see that cash, so I'm like, this would just be so much better in Bitcoin. It's losing 30% a year. And I know that it's just serving a purpose and stuff, but it's like sitting there and you're like, this is so stupid. This is so crazy. Once you make that switch, cash just turns into monopoly money, just pieces of paper that are really.
Well, it's one thing if you have clear liabilities that you need to fund over the next 7 months, 9 months.
Yeah.
That's one thing. But if you're dealing with your future and you're planning on living, 50 years, then you have a different calculation, I think. So,
yeah. Like people close to retirement or at retirement, they're like, all right, I want to go risk off. I've got this pile of cash there, and they see the number, whether it's, say, $1 million or whatever. It's just sitting there. It's $1 million year in, year out, whatever they draw down, but they don't realize that it's not buying as much anymore either. I'd like to switch gears and to be able to round out the podcast and just talk a little bit on Bitcoin treasury companies. For me, I don't own any. I won't own any. They're not for me. Bitcoin and self-custody, that's me. But I haven't really engaged with them too much apart from sort of MicroStrategy. That sort of seems like the number one. And I sort of have no doubt what Michael Saylor's doing is genius in many, many ways. But then you look at like tokens like Naka and stuff that have just fallen off a cliff and just seem like the biggest rug pull on the Bitcoin community, and just like the influences that pushed them. I don't know if that's true or not. That's just my perception. But how do you see Bitcoin treasury companies? What's your mental model look like when you're looking at these things?
A lot of people have to buy Bitcoin treasury companies because they can't buy ETFs, and they can't buy Bitcoin in their retirement account or whatever. So for those people, I think it's okay. Like if the choice is buy MicroStrategy or buy nothing, I prefer to buy MicroStrategy, right? Like,
for sure.
If those are your two choices, and that's why I think fundamentally that's their thing. Now, on the other hand, there's a lot of people who are like, well, I'm a little greedy. I want to lever up. My point is, I think if you want to lever up, there's other ways of doing it that might be better than MicroStrategy or some of these Bitcoin treasury companies. You can borrow against your Bitcoin. You can buy calls on Bitcoin. You can sell puts on Bitcoin. There's various things you can do to achieve a little bit of leverage. I think anything more than just a little bit of leverage is not a good idea with Bitcoin. And in general, I kind of feel like Bitcoin is going to deliver such a great rate of return that for you to try to mess it up by doing something fancy, the chance of you screwing up is pretty high.
Yeah,
so I wouldn't
my
recommend it
thoughts.
to people. So I would say if you're if you're in one of these, you're a French guy and you can't buy the you don't have the you can't buy an ETF in France. Well, okay, get whatever you can get. Get the nearest proxy. That's good. But yeah, I'm not. I'm not. I realize a lot of people got quote unquote rugged, but from these ETFs, and they did kind of behave a little bit like shit coins, right? In
Yeah,
terms of some of them have gone from they've gone 95% down. Like Nakamoto was 20 and went all the way down to 70 cents.
that's crazy.
But then the real question is, what were people thinking at 20? I don't know.
Yeah.
Had no.
Well,
connection.
they're just buying into the FOMO and the hype, and they've failed to put in the proof of work and understand what they were actually buying.
Yeah. But you don't need to do that in Bitcoin, right? Like if you actually own Bitcoin, but not like a proxy. If you actually own Bitcoin, you don't need to. You don't need to do anything more It's a simple thing. You buy Bitcoin, you don't sell Bitcoin. Now, easier said than done, And I have a whole chapter in there about hodling and like psychologically how you're gonna do it. But look, I plan to hold through Bitcoin 1 million. Not potentially all my Bitcoin, but most of my Bitcoin will be there at Bitcoin 1 million, right? That's and I would recommend most people to try to hold through Bitcoin 1 million. It's not a crazy number. It's very real.
Yeah. It's really just the beginning, isn't it? Like, I reckon that's when the world starts to take Bitcoin seriously, when price discovery actually starts. I think anything under 1 million, we're still early. That's the way that I see it.
I mean, 1 million, we're going to start. Even then, even at 1 million, it's not, it's just the beginning because we'll still not be at gold parity, probably. Probably not. I mean, gold will, unless gold goes down, right? But, gold might go down. But, Bitcoin 1 million, maybe we're at half the market cap of gold. Okay. That's a start. We'll have, we'll be at 30% of world based money, like central bank owned money and actual physical cash. But still, fiat will be much bigger, in every sense. M2 will be much, much bigger. So, I think it's a very long thing. It's a very long journey. And I think this is a marathon. So you get ready for a marathon, train yourself for a marathon and, train your brain to go hold this stuff for a very long time. That's what I think. And so if my book has that effect on people, that I will have achieved something for me. I like to teach people. I'm sure you do too. It's like you get orange pilled and you just want to orange pill other people, right? And my feeling,
it's addictive.
It's addictive, and because you kind of see it. You kind of see you're like, okay, I get it. Yeah. I understand. Now I want to communicate this to everybody. You're kind of like, Paul the Apostle, wandering in early Christianity, trying to carry the gospel of Christ. That's kind of what it is. And I think we one of the best ways to do that is a book, but also this app. Hopefully, we got a bunch of people using this app, and these videos. It all helps. So I devoted a lot of time, not for money, believe me, doing these things. But if I can kind of help form the opinion, get people orange pilled, I'm happy. That's it. That my work is done. I'm done.
Yeah. I think you've done a phenomenal book and a phenomenal job with the book. And ladies and gentlemen, you can get it off Amazon. It took 2 or 3 days to get it shipped here in Australia. It's great. But what I like the most is there's just so many little things that I've taken out. Like this is another one on chapter 2, the money printer. The goal is wealth preservation against monetary debasement, not quick riches. Every year you hold fiat, you transfer purchasing power to those who print it. Every year you hold Bitcoin, you capture purchasing power for those still holding fiat. It's a wealth transfer of historic proportions happening in plain sight, following statistical laws anyone can verify. And then you back all that up by the facts, which is incredible. But you've got these little sound bites that you can take to your conversation with friends.
One of the things I wanted to try to compare, which is, we all know that there's this money printer, and nothing is really beating the money printing. The stocks are sort of keeping up with the money printer. Real estate is underperforming the money printer. There's only one thing that's consistently beating the money printer. That's Bitcoin. Bitcoin is actually not just a little bit. It's just killing the money printer. So it's like it is destroying it. So, if you really think about it, yeah, the money printer is a problem, but Bitcoin is absolutely smashing the money printer as far as track record. So really, it's up to you. You can get the facts, learn what's going on, and listen. I've tried to convince, like my brother. I've been trying to convince him for 5 years now. He won't buy Bitcoin. Whatever, he owns quantum computer stocks or this, that, whatever. But I can't get the guy to buy Bitcoin. So you may not be. Maybe you're an incurable kind of hopeless guy. None of the message goes through. I get it. See you on the other side. But if you do, you're going to do very well, I think. So that's my message to people. And, thanks for covering it. I appreciate it.
Oh, it's incredible. We'll have to get you back and we'll make sure it's not so long. On that note, everyone, please do something nice for yourself today. For somebody else, be blessed. Peace.